All right, welcome to the REI Diamond Show, Ray. How you doing today?
Good. Hi, Daniel. Thank you for inviting.
Yeah, absolutely. I appreciate you taking the time out, closing out the distractions so we can have a conversation here. I'm looking forward to getting into the land deals and the real estate and all that. But why don't you give us a little bit of background, maybe about how you got into real estate, maybe where you're at in the country, where you're doing
Mm,
deals in the country, just kind of the backstory here so we know who Ray is.
absolutely. I came to America about 11 years ago with the intention to, freedom, right? So American dream. I'm a Chinese with American dream, so it's kind of awkward. But yeah, so I came to the country and to learn English, and then I found out I was homeless because I brought about $3,000 American dollars to here. I thought that was a lot of money because that's all my parents had, and they sold everything and gave me that. So I later found out very quick that 3,000 can only be, I can only afford a car. So that's the only thing I bought. And then that's my home from there, right? Right. So I
Wow.
started to live in the car for about 3 months. And then I was like, there's something I can do, right? I started to do long, the cut people's grass and try to earn some money. But then that wasn't enough. So I started to flip things, right? When I didn't have money, I go to Craigslist and there's a free section. And on Facebook, you can search free in marketplace and just go
Wow.
grab those and sell them. So that's when my flipping journey started. And then later on, I start to flip cars. And after a while, I find an apartment to live in and I start to have some type of money. So I look at all those people make big money, or at least on their advertisement, they say they make big money on real estate. So that's when I got super intrigued on real estate. But honestly, shamefully to say, I had been trying for with houses for like 6 years and didn't work out
Hmm.
for me very well because I was in Hawaii. Those markets a little bit tougher, and so I started to flip land virtually about 4 years ago. That's when everything started to turn around for me.
Wow. So your parents gave you $3,000,
Mm.
and I assume they must still be in China.
Yeah, my dad is still there. Yes, my mom passed away, unfortunately.
I'm sorry to hear that.
Yeah, yeah. Thank
What
you.
what did your parents say? I mean, how old were you when you came over here?
I was about 24 years old.
Okay, so like a
Yeah,
young guy there.
yeah.
And was this your idea or their idea? Like how did leaving China come to be the solution? And then they, made this sacrifice to put this opportunity in there for you to go.
Yeah, because I was in university in China, and then I started to have some intern in China, and then I tried that 9 to 5 job, and really didn't work out for me very well because in China, if you haven't been there, their workload is crazy. They go there like the boss expect you to go early and don't want you to go after the time you're supposed to go home. So you basically only have time to eat and sleep, and the rest you have to spend in the office. And I was asking myself, this is the kind of life I want, right? And then a very famous guy helped me. His name is Donald Trump. He is like, I didn't speak much English, but one sentence I remember is "You're fired," right? So I watched that episode every episode. I was like, those guys are some guys I want to be someday. And then that's where the American dream come from. So I started to apply for a school here in Hawaii. I got admitted, and that's when I came to the American First in Hawaii.
Okay. And what were you going to go to school for at the time?
I was doing, I didn't know what I was doing, but I study university study. There's a major called that university
Okay.
study, and so I just chose tennis, whatever I had to choose. But those are pretty fun, but I got kicked out actually doing business. Um, because I flip a lot of stuff, right? So the principal didn't like it.
To survive your flip. I think
Yeah,
it's so cool. I mean, my pressure um is nowhere near the pressure that you described growing up because I had my parents here and I could live in their house, right? It was nowhere near the pressure. But I remember growing up and I think I was maybe 14 or 15 and I used to collect and like buy and sell things too, right? I had the grass cutting business when I was young, knocking on
yeah.
doors, asking for the sale. That was helpful when it comes time to go into real estate later. But I remember buying and selling car audio equipment because I was passionate about car audio. So I would buy speakers, I would build the box, and then I would put a
Wow.
newspaper ad together and I would sell, meet guys and in parking lots to make the deal. And the buying and selling was something that I always kind of gravitated toward along the way. And I remember my dad flipping. He tried to do a couple rentals himself when I was maybe 9, 10, 12. And when he talked about the numbers, we're going to buy it for 15 grand. We're going to put 15 in it. We're going to rent it out. He did the whole numbers. And I'm like, man, this is a lot more money than my paper route is. And this is one house. And I'm like, little kid at the time. But I knew I wanted to be in real estate. And it took me until I was about 26 to get my first deal. And it was just get the same skills, right? That's why I like the background, Ray, because the same skills that maybe I had tried with little bit of success here and there, buying, selling, buy something, sell it, right? I like that. I understand that. Newspaper ads. So I put the newspaper ad when I started buying houses. I got the first deal contract for I think 6,000 or 5,500. Sold it for 11,500 and collected the $6,000 difference as my profit, and it
Mm,
changed my life. Is
yeah.
there a is there a life-changing deal that occurred, whether that was your first or maybe even one of the later deals, Ray, where you said, "Oh, this is it. This
Yeah,
works." Would you mind kind of giving us that one?
absolutely. Are you talking about real estate or some other
Hey, if you have another one that made
business?
you feel that way, we can start there, and then we'll
Yeah.
follow up with the real estate one because I'm sure that was also impactful.
Yeah, one thing I don't like to work for other people is sometimes we feel like the boss or the employer care us so much, but in fact, not the case, right? So they care about the company first and maybe their family first, not you, right? So uh, I believe my boss care about me, but when I was a tour guide in school, and then I was like, this thing is not gonna work for me. I work for like 8 hours a day. My employer don't allow us to take tips. If I take a tip, I have to give it to him. And
Oh, wow.
and that's one of the rules. And so I said, this thing is not gonna work for me. So I started to flip cars. I remember the day I flipped my first car. I bought it for 1,400. I sold it the next day for 2,800. That seems not too much right now to talk about it, but by then I worked for like $8 an hour. So that's like how long I have to work for to get that profit. And that afternoon, I sold that car in the morning. That afternoon, I went to the boss office. I said, I quit. I'm done. And I thought he'll be like, "Oh, it's so sad. I'm not going to let you go." And he was like, he didn't even look at me. He said, "Okay, you can go to the back and fill the paper." That's it. So that's all he said. So I never looked back. I never worked for anyone after that. So with as far as land, I remember the first deal I got too, and I bought it for 1,100. I sold it next day for 2,700. So that's a quick 100 more percent return. And then I start to notice there's something that maybe we don't know beforehand, and you can do this virtually. I was in Hawaii, I did it in Colorado. So you can be anywhere to flip land. So with cars, you have to stay local, right? If you try to flip cars in Chicago, if you are in Florida, that's impossible, right? So you have to do it locally. But with land, you can do it from anywhere. So that's an eye opener for me with land.
Did
Yeah.
somebody teach you that land trick where I imagine you're like 6 years in the business, you're doing webinars and reading
Mhm.
books and bigger pockets and things. Was there anybody who
Absolutely.
kind of coached you along on that first deal?
Yeah. So I paid a guy 70,000 to coach me that, but he didn't teach me that. He taught me how to do land on terms, meaning you buy a land and sell it on terms for like cash flow. And after I learned that, I was like, if you want cash flow, why you don't go to apartments? Why do you go to land? There are much higher default rate on land, right? So I started to change the system and to flip just for cash, not terms. Yeah.
And so that was like 4 years ago, you said earlier. What is your business looking like today? What kind of scale have you achieved? Let's say in the last 12 months, number of deals, dollars, however you want to kind of define what scale looks like, Ray.
So in 2022, last year, we did almost 100 deals. The net profit is up about 900,000. Uh,
Nice.
so I never been to any land I flip. Even in my local market, I never go there. So I spend about 2 to 4 hours a day flipping land last year. So this year, so far, we closed 4 deals, and I bought 11 deals already. Um, so that land is very cool. I mean, we went to all different places like Bahamas. You can still flip land virtually wherever you are. So
Wow. Pretty
yeah,
mind blowing. Do you have a team built out that helps you do this now?
yeah. I have a VA. I pay him $2 an hour. That's kind of unbelievable. Unbelievable. I share with Joe McCall, and I saw the comment, and someone said, "Oh, he's lying about $2 an hour." So I'm not lying. This is the truth. I pay the guy $2 an hour. He thinks it's a lot of money. So on the other side of the world, if you're always you are American, you probably don't know what's happening the other side, right? So those kind of
Hmm.
countries are very poor. And also have acquisition manager. I'm hiring right now. So on the dispo side, on the disposition, when we try to sell the land, we have realtors to help me out, have title company to close them. So
So what does the format look like? Maybe we should start with just an overarching definition of like maybe the ideal deal circumstances, right? Because people
mm,
say, hey, we want to buy land. And we talk about, like you mentioned, on the other person who was doing it, they're buying the land and then selling it on terms and they're chasing people for money. And to me, that sounds like a lot of work and a lot of headache
absolutely,
to,
yeah,
right? And then you talk about buying and selling it. You're talking my language. I love velocity of money. I love getting
yeah,
in and out of a deal as quick as I can. Buying a deal today, selling it tomorrow, that's fantastic, right? Getting right out of the
true,
deal or a week later, right? Whatever it is. And then we have other people, right? If we were just going to say, "Hey, we buy land," and we said that to the public, they might think, "Well, we're buying a big piece of land and we're going to build 65 houses on there." So maybe
right.
define sort of Ray Zhang's buy box or ideal lot size that you would have done on like the 4 deals you did this year.
Yeah, so we buy and sell mostly infill lots, not like recreational lots. Infill lots means you drive around and see a lot of houses, but in the middle there's a land, and those are kind of our market. So specifically, how do you choose a market, which is the first step to flip land? We just go to major cities. For example, if you're in Dallas, we don't go inside Dallas because Dallas is very competitive. But we go from 30 to 2 hours, 30 minutes to 2 hours away from the major growing city. And then we go to the secondary market surrounding the major market. And those ones are more like you have more infill lots, not too competitive, and people have no idea what their land is worth. You know, a lot of surprisingly, a lot of people in houses special. You know, like they're wholesaler, they're flippers. They don't know how much the land is worth. So yeah,
So are these generally going to be buildable lots right now, or is this an infill lot where it's like an odd misshapen lot and the neighbor buys that lot from you, or are they typically going to need to be a buildable lot?
it needs to be a buildable lots, and sometime before we buy it, we have to call the city or the county zoning department and to make sure that's buildable. Because in Texas, sometimes there's like a city limit rule. If your land is less than, let's say, 0.15 acres, they're not allow you to build something, right? So you got to make sure that what's the minimum size to build. and I don't buy too much of the R shape. Like you have to uh walk into the lots, right? So you cannot drive in the lots. That's absolutely not beautiful, right? So wet land we don't buy. Landlocked we don't buy. So there's some land we don't buy. We mainly focus on that land that beautiful.
That
Yeah.
makes sense. So I assume that these are going to be a local builder most of the time. We were talking before the show started, and you also mentioned that you have people who are like kind of collecting the land. Maybe they live in the neighborhood and they're going to hold it
Yeah.
long term, right? What
Yeah.
percentage are builders of your buyers on the 100 deals last year, and what percentage are the collector, investor, I guess you could call them, buyers?
I would say about 60% is builders. And
Okay.
they because when we buy the land, we put it back on the market to sell. And that's when the builder saw the listing, you know. But about 40% of the rest, they just want to buy our land. Everyone wants to loan something, and land is their option, right? So
So on those deals, about how long does a property stay on the market? Obviously, it was probably faster this time last year or the year before.
absolutely, yeah.
Um, are we talking days, weeks, months?
Uh-huh. About last year, this same time, we are talking about hours. So we put in the morning and after noise under contract. But right now, I'd say after like October, start to slow down quite a bit, and especially in December. You know, I only close 2 deals in December, so very slow. And right now, we do see longer time on the market. But my method is built in to be the cheapest land on the market because we're good at negotiation. And when we buy it, we make sure that the land is absolutely super cheap that people don't even believe it. And then we buy it and then we sell it to be the lowest in the market. So if there is any sell going on, that'll be us.
Okay.
Uh,
Do you typically close the deal with the seller and put money at risk? You take title before you market the deal?
I do take title, and there's a couple layers. We make sure our money is safe. And the first layer is offered the offer letter. So we offer about 40 to 50 cents on the value. How do you determine the value? The sold price. If the let's say all the neighborhood sold that land for around $10,000, similar size, and we offer 4 grand or 4,500 on the offer letter. And that's the first layer of security. So second layer is negotiation. So when the offer comes back, we negotiate again. And we tell the seller what's going on with the land and tell the truth. Let's say if there's a lot of weeds, a lot of trees. I tell the seller, hey, Daniel, your land has so many trees and land don't have really much of a smooth access. I might need to spend thousands to clean it up. What do you think the best you can do? So I let them answer that, right? So that's the negotiation. The third layer is the realtor. Um, before I put my money in the lots, before I close it, I'll call the realtor who sold land nearby. I'll ask him, hey, if I want to sell this on the market by you, what's the minimum you think we can sell this for? The keywords is minimum, not maximum, because all the realtors tend to go to the maximum thing, not the minimum. So
Are you using quick claim deed, or is this like a title insurance transaction, or are you pulling title on these lots?
yeah, it's a title insured process. Sometime in Texas they don't recognize frequent deed, so
Okay.
we don't do that. Um, yeah,
So let's say we got that example, the offer letter. I assume the offer letter is probably, we can probably talk list selection and letter maybe in a moment. But just as a
mhm,
brief answer, is my assumption that the offer letter I'm sending out like a letter with the offer, that's my first point of contact.
correct.
Right.
Yeah.
Okay. So on that example, we offered 4,000 on a letter. They call, we say, hey, the lot needs to be cleared. This is expensive. What's the best you could do? I don't
Mhm.
care, Ray. Give me $500 and it's yours. I don't care, Ray. Give me $1,000. It's yours. Now it's $1,000. what are you expecting as your minimum, that realtor to tell you that they can sell that house, I'm sorry, that lot for where you feel safe? You're getting it for a
I
thousand.
yeah, I need to, if let's say for 1,000, I don't even call the realtor. I'll buy it, right? So
Okay.
for 1,000, I will not lose.
Okay. All
Yeah.
right.
So let's say if the 10,000, right? So I'm buying for 10,000, then I need to consider well before I put the money. So if the realtor tell me, hey, the minimum you can sell it for 12,000, I'm not going to buy that deal. So for all the effort, I have to pay the realtor the fee and the title company, and I don't even know I can make money or not because of the closing fees and all the realtor's fees. So that number have to be at least 20. So
Okay.
I want that number to be double. So if it is lower than that, I'm not going to do much. Yeah.
And the title insurance fees, the realtor fee on that $20,000 sale, is that about a 2 grand, 3 grand? What is that
About
usually
two
going to run?
grand. Yeah, about 2 grand. And typically, with very small deals like that, the realtors tend to collect about 10%.
Okay, they have like $1,000 minimum commission, something like that.
Yeah, yeah, about 10%. Yeah. And for like if a deal is 50 and 60,000, they can do about 6%,
And
So
that would be that same realtor is bringing the buyer.
correct.
You're not going
And
to like,
they share it between buyer agent and the seller agent.
oh, they are sharing it in that
Yeah, yeah,
instance.
yeah, yeah.
Gotcha. Okay. So let's talk market selection.
Mhm,
We're 30 minutes to 2 hours outside of Dallas, Fort Worth area somewhere, right?
mhm,
Um, how are you building a list of lots that are buildable in a way where you're not getting these infill lots that are landlocked, if at all?
mhm,
Maybe you have to take the junk with the treasures, maybe not.
mhm. So my system building is I only believe in sold. So whatever is sold is happened, already happened. I don't predict. I am not that smart, right? Uh, so what do I mean by that? So first of all, before I actually download the mailing list we're gonna mail out, I download the comparable list. So the comparable list have to have a couple of things. In the comparable list, I want in the last 3 months alone, not 6 months, because 6 months can happen a lot of things. Only 3 months, in the last 3 months, I want the address of the lot sold, the subdivision the lot in, the size of the acre of the lot, and also the sold price. I want that four information in that comparable list. And then I use that comparable list to download the mailing list. So for example, in the past 3 months in this county, the subdivision A did not have any sold. I don't even go to that subdivision because I want my money to be safe, right? So let's say in the county's comparable list, I have subdivision A2, 1, 2, 3, and 4. And if they all have sold data in that subdivision, and then I will download my mailing list based on that.
Okay, so where is so we're taking a county wide. What is the source for getting the download to the comparable list? Let's walk through that
For
exact.
Yeah, so for this, there are two methods to do it. So for disclosure states like Florida, South Carolina, North Carolina, you can download it from list source. So there's a company called listsource.com. You can download there, and you can choose the last 3 months vacant land alone, and then for owning land, right? You can download the list there. And for non-disclosure states like Texas, you cannot do it on list source because if you download in list source, they don't have the last market sale price, which is the sold price. That's a key information we need, right? And you can download that from Redfin.com.
Okay,
Yeah, yeah. So Redfin has those data.
so are you having to go in there and how do you use Redfin to figure that out then? If there's still not a disclosure state, but Redfin does have the information?
Correct. Redfin is owned by a broker company. So meaning the owner itself, they have access to the MLS. And when you go there, for example, if you go Austin and you choose sold data, it will show you exactly how much that land is sold for. Yeah, but in other service like Zillow, you don't have it. You don't see any price sold, and on this source you cannot see that either. So
Interesting. So Redfin, because they're owned by what, the same companies that own the MLS, Redfin becomes this superior data source in some instances.
absolutely. So
Wow.
what I do is I hire a VA. The guy, I pay him $2 an hour. I'll tell him to do, let's say we want to go to this county nearby Dallas County. And then I will have him collect all the information in that county. And I only need four information: the address, the size of the lots, the sold price, and also the subdivision. So
And
that
is
four
he going to
information.
he's going to build that list by hand on Redfin? He's going to go through one at a time, put it in
Yes.
Excel spreadsheet,
Yes.
and then you go back. You can then what, take by the subdivision, the county, the zip code to put that into list source and then pull vacant land.
Correct.
Okay.
Yeah. Yeah.
And why only 3 months? I guess you're not trying to have the frothy 2022 January market data because those buyers are no longer, those markets are no longer viable in some sense, right?
Also, yeah. So also we are, not very predictable market. We don't know what's going on later on, right? So, but we know 3 months is a very safe time frame. But think about it. If let's say right now it's December, and is June last year the same as June as December last year? Probably not, right? But September last year and December last year is very close as far as the market prices and all the trend.
Wow.
Yeah.
That's mind blowing.
So I only do
Um,
3 months right now. So
yeah, the 3 months and the sold data as your research project for the county. I mean, if there are 25 zip codes in the county where Dallas is located, how many of those are you going to typically see? Will it be zip codes or will it literally be subdivisions that you're going to want to pull?
subdivisions, not zip code, because
Okay.
zip code is big. If you cross the street, that could be a poor neighborhood. If you cross another street, that'd be a rich neighborhood. So I used to do it based on zip code, so I lost a lot of money. I didn't know, right?
Okay.
So yeah, subdivision is the smallest units. Yeah.
All right. So that is very interesting way to go about it. What are the kind of numbers that would be pulled off this list, right? It's 5, 10 subdivisions. Are there like 3 or 4 lots in each one? Are you finding dozens and dozens, hundreds of vacant lots? What's the size of the list in the end?
Of course, it depends on the county or the market, but basically, what I see is you can at least find, sometime close to 50 subdivisions in that county, or even more, right? So each subdivision, when you pull the mailing list, that should be at least there are 10 of them you can mail to. So I take that sold data, I start to make offers, I mail them out, and whoever want to sell, they'll call me back.
So you're constructing the offer by subdivision?
By subdivision and based on the sold price.
Okay. And then just put 40% calculation in the Excel, make a
Yeah,
spreadsheet.
yeah, and typically 40 to 50 cents on the dollar. So if a more competitive area, I would do like 50%.
Okay.
Or yeah, if less competitive, I'll do maybe 40 or 42, you know.
Interesting.
Uh,
So what is the average deal size now recently? Are these all five, $10,000 purchase, sell for 20? I mean, is it $40,000 purchase, sell for 80?
yeah, I make sure that each deal I make at least 10,000, at least. That's a bare minimum. So if I used to do a lot of small deals, uh, my first year I did 200 deals, land deals on. I buy it for 1,000, sell it for 2,500. But I'm tired of all those, right? So,
It's a lot of
uh,
work.
yeah. So right now I'm doing deals range from 15,000 to 250. We recently closed the deal at the end of last year. We bought it for 70,000, sold it for 155,000. Uh,
Nice.
yeah, it's a land nearby Houston. So, you can basically choose the price range whatever you want because land is very flexible. You can find land for like a couple hundred in the neighborhood. You can find land for like 500,000, right? So it really depends on the people's choice.
Interesting. Do you take into account at all from a broad market selection, if we were looking at the United States, how would you land on a particular county to then
Mm.
do that next layer of research?
You can do that in this source. So you can choose the last 3 months only vacant land and then choose the whole United States market. And then you can download that comparable list without paying it. There's a by partial list at the end of the checkout, and you can choose the county, and you can export the list showing which county sold for how many land. And then you sort it by large, smallest. You can find the market that sold land the most.
At the most price point or the most volume of sales, or both, a combination?
No, no combination, just the volume of sales.
Volume?
Yeah,
Okay.
volume, yes.
And will you take into consideration the selling price as you're
Not
selecting market?
after you choose from that, you sort it by largest to smallest, and you choose a market, and then you can verify in Redfin to see if that price range fits your budget. But normally I tell people you want to have at least 40 sold in the last 3 months in that county. So if a county that has less than 40, I'm not interested. And
And that's
for
because it's too risky, right? There may no
correct,
more
yeah,
builders are.
yeah, and it's not very risky because every land has an owner, and you can definitely sell that, but it just depends on the time. So if you go like if you have like 10 sold in the last 3 months in that county, when you have a land for sale, that'll be taking a while, right? So
Slow moving.
correct, yeah,
What is
yeah.
the longest piece of land other than land that you hold for the long term? What's the longest deal that it took for you to sell the property?
Uh, yeah. So that's when you buy, you really be careful. Right now, I'm taking student and I teach them, right? So before you buy, I tell them what land you don't want to buy, right? For example, one of the land we don't buy is land with drainage, right? That's a very hard, expensive lesson. I bought a land last April. I forgot to check with the realtor to see if there's drainage on the lot. There is a drainage inside. So I bought it for 18,000, and without the drainage, I can easily sell it for 50. But it's still on the market right now, so I don't know how
Wow.
long
Is that
it'll
like
be.
there's like a sewer line in the middle of the.
So the property is kind of inclining going to the drainage. Drainage is outside the property,
Okay.
so it's kind of like this shape. It's a slope. It's going down. So no builder want to build there.
Do
So
you ever check the topography of the land as part of your due diligence process?
right now I do. So
Fair
yeah,
enough.
yeah,
Do you spend time going to the county's GIS maps for things
yeah,
like utilities and
absolutely. Yeah,
okay.
yeah.
What other
That
due diligence didn't we talk about on a piece of land like the drainage that could be a deal killer or
mhm.
maybe something that on the flip side you're excited when you see it?
A lot of houses nearby. I'm super happy to see that, and that means if I buy I for sure sell it very quick. And also there's power nearby, and there's water nearby, right? So not on the lot, so if there's a wetland, not good. So if it's close to the ocean, your land will worth a lot of money. People love water, right? So, and also there's no ocean, there's like a lake, a river, and is for sure will raise the price of your lot. Yeah,
Okay.
but Yeah, but you got to make sure it's not on the lot. So
Can't
that's
build
not good.
otherwise, right?
Yeah, yeah.
So I think like, we're sitting here, you and I talking, it's January 2023, and a lot of people are probably tightening up because
Hmm.
of the potential for the recession in the economy. Things are changing in the
Hmm.
economy, the interest rates are rising. What modification to your business model, maybe, or right? If someone was going to do this right, is it still a good idea to try and do this when we're staring down the barrel of these headlines about real estate is declining and all the kind of things, right? Even
Hmm.
earlier in our podcast, we were talking about it's longer to sell a deal, and we're looking back 3 months, and we were making jokes about how great it was 12 months ago. Is it still great? Are you still excited? How are things changing in this niche of flipping buildable lots?
I'm more excited actually. And when I tell people all the time, land is a business that you earn money when you sell because there's a profit, right? So, and you also earn money when you don't sell. Why is that? For example, I bought a land 3 years ago, Oklahoma. I completely forgot about it, and because I've, they never sent me a tax bill because I moved, and they sent to the old address, never forward to me. I bought it for 2 grand back then, and that by then the land was worth about 4 grand, so I bought it for half, right? And after 3 years later, I was going to go to that market. I searched my name. I was like, "Oh, that's my name. Is this me?" And I look at it. Oh, that's me. And I started to sell it. I put on market. Within days, we sold it for 15,000. So when you don't sell, the land worth more. And think about clothes or fashion business, right? So the clothes we are wearing is fashionable this year, but what if you don't sell it next year? Nobody is going to buy that clothes. So this is kind of business you want to get into, right? And why I'm super excited about this thing is when there's a recession, you do the opposite thing. When people sell, you buy, right? That's exactly what Warren Buffett means. When people panic, you are happy, right? So because you can get things super cheap. And the one twist I'm doing right now is I'll lower my offer price, right? Because we make offers already based on the last 3 months. Because if the last 3 months performance dropping, my offer automatically drop, and then I would change my percentage of offering even less so that I can get a double kill. And then right now, I hope people panic. I mean, if they panic, the more I get more land. I can sit here. If I don't want to sell, that's fine. I can keep it, and someday they will go up, right? And land typically don't go down very much like houses. So
Yeah, so there's like the concept of land banking, right? So we'll probably touch on you and I, just like you were talking on, right? The land has the potential to keep on rising if it's well located, well selected, buildable lot. We would see in Philadelphia as an example where I grew up, New York buyers would have much more money, and their context for the property values is significantly higher because New York's real estate is exponentially more expensive than Philadelphia's. So when I was growing up in the 80s, there were transitioning neighborhoods where gentrification was taking place, and the New York buyers would buy the shells or sometimes just old dated property. They would pay whatever the retail value was. At the time, it was probably five, maybe 10 or 15, $20,000. They would board it up, and they would just pay the taxes, and they would forget about it. And in a sense, that was a land banking model that people were same way money would go to an IRA and sit there and be forgotten about for 10 years, 20 years. The New York buyer would do the same thing with houses in Philadelphia, um, boarded up, and the taxes were
yeah,
cheap enough in Philadelphia where they could sustain that long term. Vacant land in Philadelphia, for the most part, is going to have reasonable property taxes to allow that land banking strategy to work long term if the lot is well selected. You had to buy it for the right price. too, right?
Absolutely. Yeah.
When I moved to Chicago in 2015 and I started to get comfortable in the Chicago market, Chicago is almost like a New York market in that it's very expensive for real estate in
Yeah.
Chicago. Surprisingly expensive, even in crime challenged neighborhoods, you're still dealing with $300,000 houses, 350 in some instances. It's just like very expensive to live in Chicago. The land banking model does not really work in Chicago because a vacant lot in a crime challenged area where there is no new construction taking place may have a tax bill of $1,800 to $2,000 per year.
Wow.
So you can buy the lot, 5,000, but within 2 years you can't sell it, and now you're like losing money from the value, right? So like
Right.
even in really desirable areas, I knew some people who defaulted and weren't doing a land banking strategy on purpose. It was land that was in the family, and he's paying $5,000 to $6,000 per year in taxes because it's a really desirable area where new construction is going on. And it's like over the course of 10 years, 15 years, and he didn't pay the taxes, so he had penalties and they're piling up. But he's way negative
Yeah.
now if he would have sold it before. So when we talk about a land banking strategy, I think part of the market selection in something like that is going to be evaluating the county's tax structure to not take a commitment on the property taxes being too high. Do you have any insight on that, or maybe you would discuss your own land banking strategy for properties you might decide to hold now, Ray?
I think you covered it all. So you just make sure that the tax is not crazy high. I mean, for another about market is I never go to migration out states, meaning people are majority moving out instead of moving in. So, for example, I would never go to New York market. I don't care how much it's worth. So, because people are moving out, New York was losing 300,000 people last year compared to people moving in. So, California is the same thing. I'm not going to hold and buy and hold there, because I want to hold a place that, first of all, like you said, taxes is affordable, and secondly, people are desirable to go in. Like Florida, Texas, those are very good states to hold your land. You don't want to hold it for 10 years later and that state is empty and it's empty and nobody is there anymore, right? So, yeah.
So do you actually have a strategy right now? Is that part of your business model to hang on to certain properties for the long term, or is it much more transactional, get in, get out on everything?
I would say about 2080. I will just keep 20 of them, 20% of them and sell 80 of them.
Wow,
Unless
that's
it's
actually a lot higher than I
yeah.
thought.
Yeah, unless that market is, let's for example in Florida there's a market called Ocala. So Ocala is not as famous as Orlando or Tampa, but it's in the middle. So a lot of people are moving to those market right now. So I keep a lot of land there. And where I live in Jacksonville is the largest city in the entire country. Um, I still have a lot of land here because I think Jacksonville will be very famous. So that's where I keep majority of my land.
Okay, all right.
Yeah,
Yeah, I was thinking as you actually mentioned it, not to go back in the story a little bit, but we are. So you talked about adjusting the offers during the recession, and
yeah,
people are afraid to buy with the headlines in your face. And I think about the way that we're seeing the market operate, even in our own company. We'll sell into the marketplace, and sometimes we don't do any renovation. We sell the property as is. Another investor comes in, they buy it, and they do the renovation. And we're selling deals at remarkable prices.
yeah.
And I'm surprised, right? I encourage people like just make the offer. If you go look at a property, make the offer. It doesn't matter like
Mm,
what the asking price is, you got to make your offer. I see the person who makes the offer get the deal. And a lot of times that's how I'm getting a deal. I make an offer on everything, right? I feel like my company is a market maker and I have an obligation to the United States real estate marketplace to make an offer on any piece of property that's presented to Diamond Equity We owe
Yeah.
them a price quotation. This is why our company exists. We're willing to buy it and take on the risk. If it's a worthless lot that's landlocked, we are going to take a pass on certain pieces of real estate. But if there's a buyer in Kansas City with a 10-unit building, I'll make an offer.
Yeah.
If there's a seller with a shopping center in Flint, Michigan, I will make an offer, right? And if there's a house in Atlanta, I'm going to make an offer. And I think that has
Yeah.
been one of the overarching principles of certainly my own real estate career is to get over the fear in a marketplace that is changing and figure out what the offer is going to be and actually make the offer. Because if you never make the offer, you're never going to have a chance to make the profitable deal. And I see a lot of newer investors or even experienced investors sit on the sidelines and they're missing some very good deals right now as we speak in the recession, right, Ray?
Absolutely. It's same as dating. And if you date a girl, you tell her, I like you, you look beautiful. Let's go out some other time, right? So if you always say, oh, you go there and look at her, oh, she is beautiful, and you're afraid to say anything, you're not going to do anything, right? So the girl will not approach you. The seller will not say, hey, Daniel, I really love you to buy this land or the house. Can you do this price? No, they'll never say that. So
Correct.
yeah,
Um, cool. So, Ray, you've done a remarkable thing in the 11 years. You've come to the country. I don't know that we mentioned it on the recorded part of the podcast, but we were talking there beforehand how you literally had to learn English when you got to the States. And so to
yeah.
have built, a remarkable business that did what it did for you in 2022 and to be hanging on to land and building a portfolio, it's amazing. And I think a lot of people look up and respect that. I'm curious, along the way, were there any sources of wisdom? Were there any books that were very instrumental in helping to like shape your mindset that you might recommend to people who are listening right now?
So I had a book called The Science of Getting Rich. So to get rich is really a science, and I was first introduced to the book when I was like I was wiping out people's floor. Remember, I was like cleaning people's floor. I was putting on my earphone. I was listening to that twice a day. Listen to that book. It's not a big book. So I listen to that twice a day. I really changed my mindset because for all any type of success, it's 80% mindset, right? 20% of how you do it. So you got to change that. And it's really hard to think rich when you're poor.
You're right about that.
Uh, yeah. So how do you get to that level when you're poor is crucial. So if you look around, whatever you see, either it's table, your iPhone, whatever it is actually created twice. The first one, the first time is created in their mind. So how do you create rich when you're poor? That's crucial. And then you can create it in a reality. So that's really helping a lot.
Do you remember if that was the Wallace Waddles version or whether that was Bob Proctor's version or was this another author?
That's called Wallace Waddles. Yes, he
Wallace
is.
Waddles.
Yeah,
Okay.
yeah, yeah, yeah. He is like old Asian, like in 20s, 1920 something author. Yeah,
Wow.
yeah,
Yeah, I think I read that myself in around 2009 to 2011. I
yeah.
remember reading Science of Getting Rich. It's a very unique recommendation. I think that's the first time I've heard that on the show here.
Yeah, this is the first time I heard people read it. So
Okay. So yeah, we get a high five.
yeah. And yeah, they always thought I was talking about Thinking Rich. That's a different book. So
Okay. Yeah, that's pretty cool. So if you could go back, right, as a closing question, I'd like to ask my guests, if you could go back to a crucial time in your life, right? Let's say it is when you were 25, 26. Maybe you were in Hawaii at the time. I'm not sure. But certainly in the beginning there, is there the crown jewel of wisdom? Like what would you share with yourself then, knowing everything that you
mm.
know now?
The principle I always abide right now is you take when you are poor, take a lot of risk with little money. A lot of people do this this opposite thing. They afraid of doing things when they're poor. Let me ask you, what are you afraid of? Right? So there's nothing you need to be afraid of when you're poor because you don't have money. You cannot lose much. But the opposite thing is true too. You take little risk with a lot of money when you're rich. So a lot of people do the other side again. They take a lot of risk with a lot of money, and that's when they go back to their poor life. So when you're poor, take a lot of risk. And when you're rich, take very little risk with a lot of money. So I think right now, just for me right now, I'm not like mega rich, but I am very careful of what I invest, what I spend. I don't want money $1 out without my recognize without my knowledge. So
I love it. I wrote it down. I got like 3 pages of notes here. This has been a really great episode. Ray, is there a website or contact information or anything else you'd like to ask of the listeners before we wrap up?
no, if you have any land questions, just add my Instagram. My Instagram is virtual flip land. So one word, VIRTUAL, virtual flip land. That's it.
All right. Well, hey, I appreciate you coming on the show. Like I said, I got a ton out of this myself. I'm sure the listeners would agree. So thank you for coming on the show, Ray.
Thank you, Daniel. Thanks so much.